G'day parcettos. In today's metaverse, we're going to hang out in an interesting little area of town that's forming in between the finance district and the NFT district. There's a new genre and that's called NFT-fi. So today we're going to be looking at two options, two different platforms that are popping up in this space. Now, a wise man once said, if you want to get rich, build a product. If you want to become wealthy, build a marketplace. And here are two marketplaces, not just for the buying and selling of NFTs, but for the collateralization of NFTs. Yes, taking out loans on your NFTs. So we're looking at two of the platforms that are up and coming. They haven't really officially launched their products yet. So as always, we're looking at getting pieces of the right databases early. And these two are causing some buzz on Twitter. They have some similarities, some differences. Let's jump through them now. This is what Drops looks like. Instant loans for JPEG and NFT and metaverse assets. They've got a nice aesthetic, I think a real simple, straightforward entrance platform for people to start using this kind of service. The NFT industry has exploded and it's going to continue to explode as more money investment utility and gets built into these NFT communities. So I really like the look of that one. This is Drops and this is JPEGD. Now JPEGD is a bit more degen, I think. It's a bit more anon. It's backed by some very serious NFT anon personalities such as Tetranode, Dopex, The Lao, Bowtied Bull, DeFi God, Santiago Santos, DC Investor. All of these people have very large audiences and followings on social media. So they certainly have a leg up when it comes to looking for that user base, looking for that adoption. One of the key differences that we're going to get to here is how the loan actually works. In JPEG, you deposit an NFT into a vault, you mint PUSD, and that is a stablecoin, which is pegged to $1 US, and then you can use that PUSD to exchange for other tokens, other cryptos, other stablecoins. It's up to you how you're using the loan, but because you've got your NFT locked up in a vault to generate that liquidity, and these are the people behind JPEGD. It's a little bit of niche messaging, niche humor. Let's compare the two platforms. Drops is designed similar to Aave. I actually got into Aave when it was Lend, before it became Aave. Now it's a massive lending protocol, very mainstream, you could say, so very well adopted. The JPEG model is similar to Maker, where a stablecoin is issued and then new collections mint PUSD, powered by Chainlink as well. Okay, tokenomics. On Drops, governance token used to delegate liquidity incentives, vote on proposals, and dictate distribution rates to each pool. Provides voting rights to add liquidity pools for new NFT collections. Whereas on the JPEG, government's token used to create or vote on proposals such as debt limits on vaults, changing deposit, interest fees, insurance, or any other type of fee, approving increased credit limits. Okay, so they're both involving the community. You own the token, then you have governance in the token as well. So this is going to be both community-driven tokens. Quick look at the valuation right now. This is pretty close to up to date, but not completely up to date. Total supply 15 million at Drops and 69 billion over at JPEG. But they do have a market cap coming up to around 80 million, whereas the market cap at Drops is only about 13 million at this time. They've both been audited. And let's go take a look at a little bit deeper about, okay, this is the drops. Let's, we can get a little peek inside what's going on here. Essentially, you're going to be able to stake your tokens once you have the DOP token, 63%, 206%. So some decent returns there. But again, I'm all about looking for these bags that I can 10x. So what are they? Who do they say they are? Drops Ownership Power, DOP, is the Drops DAO governance token. It has the power to delegate liquidity incentives among lending pools and decide on the future of Drops DAO. Okay, currently DOP, two main uses, voting and staking. Okay, so when a user supplies assets, the oracle determines collateral value. Depending on the asset type, the user can then borrow up to 50% of its value. Okay, part of the reason that I'm looking into this is because Degens going to Degens, and people with money are going to be looking for ways to take out loans on that. A big chip to switch, and I have this in a signpost on our metaverse. Markets transfer wealth from the impatient to the patient. The patient are buying assets and they don't sell those assets. They take loans out on the assets. They live their life. They pay their life expenses from the dividends of their assets. And that's such a big switch. Changing the chip, hay que cambiar el chip, and that's the key to what's going on in the world and why the wealthy get wealthier. So these marketplaces are providing a way for people who have built tremendous wealth in NFTs to be able to access liquidity. NFTs aren't as liquid, especially when you're talking the punks and the apes in the hundreds of thousands and millions of dollars. Finding a buyer can take time. So this is a way that they can access liquidity very quickly. So now let's go take a look at JPEGD, which has not been launched as well, but there'll be a 152% staking on the JPEG ETH pool, and 17% if you just single stake the JPEG there as well. Okay, so this is another governance token that is going to share in the growth of the platform as more people use it. Now, considering this is around an $80 million market cap protocol, and this is a $13 million market cap, I am leaning towards this one when my investment goal is to go for those 10x, to find for that protocol that is going to go through massive value. And although JPEG has this advantage, I don't know, I just like that this is going to appeal to a broader database, and we're really in such an infantile stage of this whole NFT understanding that we're happening. So yes, they may be winning in a certain core OG niche section of NFTs. I just think Drop is going for a bit wider appeal. I mean, they're essentially becoming a loan marketplace for NFTs. So really, I think both are going to win. This is going to be a growing space. JPEGD is a decentralized lending protocol on the Ethereum blockchain that enables non-fungible token holders to open collateralized debt positions using their NFTs as collateral. Users mint PUSD, the native stablecoin of the protocol, enabling them to effectively obtain leverage on their NFTs. Okay. Loan to value ratios, all debt positions will allow 30% of the collateral value to be drawn, and liquidation will occur if the debt collateral ratio is 33% or higher. For example, if an NFT is valued at 100 ETH, a user can draw up to 32 ETH. If the NFT collateral value drops slightly, or the user draws more debt that changes the debt collateral ratio to equal or exceed 33%, he or she will be liquidated. Okay, so very volatile assets are going to require more attention on your loan to make sure that you don't get liquidated. Okay, in terms of token prices, DOP is at $2.55. JPEG is about half a penny right now. You know what I'm doing here, and again, if we get too spread thin, we're not going to see any growth. So right now I'm dabbling, I'm getting a lay of the land, and when I find the place and the time to strike, that's when I go hard. If you're looking to grow a portfolio, you have to concentrate into one area. If you're protecting a portfolio, then you're diversifying. You're looking to spread out and protect that wealth. Concentrate to grow, diversify to protect. So in this space, I'm looking for, okay, where can I put bags that have huge asymmetrical risk? I think both of these have a lot of upside as they go through their launches and that initial development phase. I think there's a lot of attention to be had there, and that is what is going to see the increase of the market caps and the value of these tokens right here. Let the NFT projects go out and build the products, but hone in on what are the marketplaces, right? I think the marketplaces is always more of a sure thing, especially in a new, innovative, rapidly changing industry where, you know, projects are coming and going. The winner is always the marketplace. So when I'm looking at new industries, new niches, I'm looking at where's the marketplace, and sitting right here in between the NFT art district and the financial part of town. I think I'm gonna add in drop or JPEG. I don't know. I think it might be drops. What do you guys think? Let me know which one are you looking at. What do you think about this whole taking loans on digital assets industry? Thanks for tuning in. Have a wonderful Sunday. I'll see you guys in the next video.